Hey, welcome investors to the 40 Finance channel. Today I'm talking about Zillow stock. This is one that I own with a cost basis of about $69 or so. And the stock trades today at about 50 bucks. And that is coming off of its all-time high of almost $200 back in February of 2021. Now, if you're not familiar with Zillow's recent history, in late 2018, they launched basically a house flipping business called Zillow Offers, where they were buying up real estate based on their data and then reselling it. Now, they went all in on this program and spent billions of dollars buying up inventory. But as the years went on, particularly through the pandemic, and then as of last quarter, they found that it was just, honestly, was a loss leader. Things weren't turning around in the way they expected, so they shut the entire operation down. Not surprisingly, shortly after the announcement last quarter, the stock tanked because you had basically their big bet, right? Their so-called growth segment. They were closing it down, calling it a failed experiment. And there's a lot of investors out there who bought into the stock because of that. So when the story changed, they bailed, the stock tanked, and now we're left wondering what the future holds for Zillow. Now, from my desk, my interest actually peaked when Zillow announced that they were getting out of this loss-leading segment. This is a stock that I had been watching since 2016, 2017 or so. But since they weren't profitable, I never pulled the trigger on it. And then they got into the iBuying, and we got into the wacky world of the pandemic housing boom. And during that stretch, I just decided to sit on the sidelines. So when I heard that they were lopping off an unprofitable arm of their company, I suddenly became intrigued again and started thinking about what Zillow could become in the future after they get out of this wind down. So for this video, we're going to look ahead. We're going to fast forward to when Zillow's completely done with the iBuying segment. It's completely shut down. It's off of the balance sheet. We'll try to figure out if there's any value to this stock going forward. All right, switching over here to Seeking Alpha. This is our Zillow stock. Ticker symbol ZG is the one that I own. They also have ticker symbol Z, which is more like the Class C shares. Doesn't really matter. They both trade in about the same range. And on the board here is the 1-year view of Zillow, and you can see this one is down 70% over the last 12 months, which is obviously not good. Here is your peak of, actually it looks like $203 was the high, and now you're trickling down to $50. Interestingly enough, though, if you zoom out to the 5-year view, which would take you prior to the iBuying period, which really hit its peak, or official start, if you will, into 2019. You can see here in 2017 and into 2018, you're right about where the stock is today, in that $45 to $55 range. Now, for some of the stuff that we'll be looking at, it's important to note that as things stand today, Zillow has a negative EPS going forward. It does not have a PE ratio and is technically not profitable where it sits today. We will get an interesting update on where things stand on the closure of the iBuying arm on Thursday, February 10th. That's the next earnings report, and that should give us a little bit more visibility on where profitability sits going forward. Now, next we're going to look at the past couple years of earnings reports and try to break out some of these segments to see what would happen if iBuying dissolved into thin air, what would be left, and how would that impact Zillow's stock from a profitability standpoint. But before I do that, I do want to call out, since we're here on the Seeking Alpha website, if you look down in the description, my affiliate link is down there, gives you a significant discount on a 1-year subscription to their premium membership. So if you're interested in learning more about Seeking Alpha, potentially supporting the channel, definitely save some money and click on that link below. Okay, here we are back in the 2020 full year financial highlights. So this also gives us a view of 2019. And the home segment, which is, Zillow Offers, iBuying, whatever you want to call it, that's where this one sits. And you can see they grew revenue up 26% from 19 into 20. But in tandem with that gain, they also grew their loss year over year. So much more sales, plus 25%, and oddly enough, a bigger loss to go with it. Doesn't take long to figure out that that's not a good thing, and my guess is they probably started to have second thoughts here right around the end of 2020. Now, outside of the losses, this is what we want to focus on going forward, which is this IMT segment. And if you're curious, it stands for Internet, Media, and Technology. So it's a combination of advertising, real estate agent services, so on and so forth. And when we look at the earnings report for this segment of the revenue, which will go down here to the total, it was actually up 14% year over year from 19 into 20. Now, 14% isn't a barn burner by any stretch of the imagination, but keep in mind, with the pandemic, you probably had at least 2 months in there where there was basically zero activity going on in the market. And perhaps more importantly, outside of the 14% growth or so, if we go down here to adjusted EBITDA for the IMT segment, you see you go from $303 million up to $556 million. So not quite a double up there, but it is a plus 75, 80% year over year, much higher than the growth rate itself. All right, now let's flip over to 2021. And remember, we'll get the final earnings report this Thursday. But for now, we've got our 9 months of data that we can compare year over year. We know what's going on with the home segment, but we also know it's disappearing. Technically, they had 89% growth in the home segment, but just like the report before it, you also have compounding losses. So this is the earnings report, where they decided to pull the plug on this experiment. But for purposes of this video, we're going to brush all that aside and we're going to focus on IMT. And you can see IMT was plus 37% year over year. So the year prior, it was plus 14%. This year, 20 into 21, you are plus 37. And if we go down and eyeball adjusted EBITDA, you're getting even closer to that double up. So 2 years in a row on the IMT segment that the profits or the adjusted EBITDA are actually up significantly higher than the growth rate itself. All right, now just taking a quick peek on Google Trends, just comparing Zillow itself for the homes for sale search term, and they pretty much go in lockstep, as you can see here. One thing I did find interesting, though, was that the overall interest level for both Zillow and homes for sale was actually higher in 2020, just ever so slightly than what we saw in 2021. But if you think back to those income statements, 2021 was actually much higher growth for Zillow compared to 2020. Now, if you're looking at this tail off here and wondering, is that bad news? I would say not really. I'm certainly not worried about it. When you get into Q4, you think about holidays, you think about cold weather, etc., and really the thought of selling your house and or moving during that time period, I would say most people would avoid that unless they absolutely have to move at that moment. And this bounce back up in the trend line is where things are going to be interesting. And frankly, I think it's a huge X factor that's almost a flip of a coin. So on the one hand, you have demand for housing is at its highest peak that it's probably ever been in recent years. However, it's muted by low inventory, high prices, and the possibility, or frankly reality, that mortgage interest rates will be going up this year. So here we have a 10-year chart of existing home sales volume. And you can see it pretty much goes up over time. It follows this trend line. And I guess the thing that stands out to me on this chart, again, I feel like a lot of these ebbs and flows are seasonality. So you see you got 2020 here, 2022 here. So I'm guessing, without magnifying it, that this is basically winter, right? And then this is summer. But look at the gap between 2020 home sales volume versus 2021. Certainly less volume, but what we saw on the Zillow side is they actually grew their revenues 37%. Now, you could also jump in here and say maybe this is heading for the next leg down, right? So maybe instead of bumping up to this level in 2022, maybe it only gets up to the trend line of 6,000 or so. And I'm not sure that would surprise me too much, but do keep in mind that this is existing home sales volume. So this is people who already live or own a house. What about new homes? And switching over here to United States housing starts, and we have a 10-year chart for this one. So on new housing starts, you've got a chart that minus the pandemic is basically up and to the right, certainly over this last 10 years. So how does that relate to Zillow stock? And I guess the way I see it anyway is that new homes have to be marketed and sold as well. And so while we see some weakness in existing homes, potentially another step down this year, no one really knows for sure, but new housing starts are right on pace to do just at least as good, if not better, than what we saw in 2020 and 2021. All right, so the first X factor for Zillow stock, in my opinion, is just the housing market in general, right? We know that we have demand. We know that we have good housing starts. We're not too sure about existing homes, and we're not too sure what interest rates will do to the purchase pattern for consumers. Now, normally projections on housing sales are fairly predictable, right? They're like a plus or minus 10% kind of thing. But in my opinion, this housing market is a great unknown. You have some things pushing down demand, aka prices and obviously interest rates. But on the same token, you have high demand in general for housing. Now, which one of those forces will play out and ultimately win the struggle? I can't say for sure, but I feel okay about owning Zillow stock in this current housing environment because I think that there's a lot more variables than just rising interest rates. All right, now the second X factor we have on our side for Zillow is another coin flip, and that is sort of accounting ambiguity. So with this wind down of the iBuying segment or the home segment for Zillow, it's going to take at least another year to clean up the accounting so that when they do earnings reports in the future, they're not comping the old segment, that they've got everything off of the balance sheet, that they finally closed down and streamlined their operations. So because of the time it takes to do this, we could see some irregular EPS reporting well into 2022. Now, on one side of the coin, that EPS reporting could be negative because you have the expenses that will be involved in closing things off. But there's also a chance that we see a huge earnings beat to the bottom line because the outlay on the homes that they bought for that segment, that was done in some cases fiscal years prior to now. So it's going to be a little bit of a rocky ride from an earnings reporting segment. And I think with that, there is some opportunity. Now, some people are just going to cast away the whole thing and just wait for Zillow to get back on track, which is totally understandable. There could, however, be an opportunity to get in today, depending on how optimistic you are about the company, because you're going to have these ups and downs, certainly I would figure, through the first half of 2022. All right, so let's see what analysts are thinking for the out years for Zillow. And again, I think this is very, very hard to project right now. So I don't know how much stock I'm taking in any of these opinions, but on the bright side, we do have 14 people putting their name in the hat and making a guess. For 2021, projection is to come out negative. And that's not really a surprise knowing what we know. Now, looking ahead to 2022, you got the estimate of $1. That puts a forward PE at 45. And quite honestly, depending on what we hear on Thursday, this forward PE goes into effect immediately because they will be closing 2021 and all eyes, of course, are on 2022. Now, if we assume that by the end of 2022, we're all done with the home buying, iBuying, all that stuff's off the books, and we can get focused again on IMT. In that situation, analysts are saying they could bring in about $3 a share. So we have a price today of $50. $3 or so per share puts your forward PE at about 16. And that puts you in good company, certainly when you consider any sort of internet platform type stock, right? Now, which PE is more fair, right? 45 or 16? And that's going to boil down to the revenue growth rate once we come out of the ashes of home buying. And you can see that visualized here, where revenue this year with home buying was in $7 billion. Frankly, they've got it dripping under 7 next year. I probably would say this tanks even more. But it's not until 2023 when you start to represent just IMT. So if that's correct from a comp standpoint, you're going to get killed for those looking at sales because you're looking at basically 2 or 3 years of negative revenue comps that are going to show up on those earnings reports. So with that in mind, I'm going to say revenue growth is certainly not going to be the headline story for Zillow. It's going to be back up here with an EPS growth, which isn't going to attract as many growth investors, but it does have the opportunity to set you up well for the long term if the company is able to start printing money on the profit line. All right, another small variable that they announced in December that could help if it gets extended a little bit more is the stock buyback program. Back in December, they announced that they would be buying back $750 million worth of shares. I did not get the detail for the timeline of that repurchase, and we'll have to see if they add to it at all coming out of the next earnings report. All right, so bottom line with Zillow's stock. I think it's very understandable for the negative headlines that you're going to see with this one, particularly with management kind of changing direction. But I stand by the fact that it was a good move in the long run. And when you include the X factors of the housing market in general and which way it goes, everyone thinks that they're an expert. We will have to see what happens. All I know is people are looking to buy homes. So I'm betting on the glass half full. Then you also have the nature of this segment change. It's going to muck up the books for a little bit, and that's going to make it very hard for the average investor to speculate where Zillow lands from an EPS standpoint. All right, guys, so on my end, waiting to see where things land. On Thursday, I might buy a couple more shares before then to try to bring down my cost basis from the high 60s. But overall, with Zillow right now, my expectation is going to be hold it for 5 years, see what happens. I'm in no hurry for a quick return. I don't think that this is a good stock for like a swing trade or anything like that because there's just not enough verifiable metrics to get in there. However, if you're like me and you've always sort of liked playing on the Zillow app and you've kind of admired their company for whatever reason, this could be a good time to get in for a long-term hold. Just pick your spots and only buy on red days. All right, investors, let me know what you think about Zillow stock. And as always, please give the video a like, subscribe to the channel. Don't forget to check out that Seeking Alpha premium offer down below. Appreciate your support. We'll see you on the next video.